All right. So to start with today's class, please join me as we pray the True Millionaire's Prayer by Brother Bo Sanchez. Lord, today we ask you to bless us so we may become a blessing to others. Lord, we commit ourselves to enrich others. But because we cannot give what we do not have, we commit ourselves to become rich. We commit ourselves to serve you and to serve the poor with our wealth. Today we open ourselves to the abundance of your universe. Use us as your channels of love. Give us the ability to create wealth that will bless the world. Increase our financial wisdom and expand our territories. We place our lives in your hands. In Jesus' name we pray. Amen. All right. Hello again, everyone. Welcome back to our daily fun day habit. Thank you for joining our financial literacy class today. So, how is everyone doing so far? How is the weekend? Can you give me a heart reaction if you're excited and ready for today's class? All right. Any heart reaction? All right, thank you very much. I hope you're all ready to listen and to take notes as needed. You can also take screenshots of information that interests you all throughout the presentation. If you have questions, please write them down and talk to the person who invited you. We value your time with us and we will ensure that this next hour is going to be worth it. So today we will be discussing about 5 topics. One, we will get to know what IMG is. Two, we will discuss about the financial challenges that we face. Three, we will learn about the 4 basic financial concepts. Four, we will introduce to you about Kaiser healthcare program. And five, we will share with you the benefits of being part of the IMG community. So, with these 5 topics, all of us should be able to learn something new, relearn something familiar, and unlearn something that needs changing. And to introduce myself, my name is Mayyu Cappleman-Bajet, and I will be your host for today. I am a marketing director here in IMG, and I am very much excited to share with you what I have learned by being a part of this community. In IMG, our mission is to educate 30 million Filipino families by 2030. And that's why I congratulate you for taking the first step towards financial literacy, towards overcoming poverty, towards financial independence. You are here because someone thought of you. And that someone believes that you will greatly benefit from what you will learn today. And what you're about to learn are all taken from this book entitled The Secret to Saving and Building Your Future. So, what is IMG? What you see here on the screen is the official logo of IMG, its website, and its current campaign. IMG stands for International Marketing Group. It is a global company that serves as an avenue in achieving financial security. It caters to the financial needs of every individual and families who wish to achieve financial independence. IMG's mission and vision is about helping every Filipino family to become wealthy or rich or financially secured by making financial education available for everyone, regardless of status or professional background, by teaching every Filipino how to save the right way. In IMG, we will share with you a financial planning strategy that is simple, clear, doable, and easy to understand. In other words, IMG is a financial brokerage company who assists individuals and or families who want to help themselves achieve financial freedom through financial education. We highlight financial education because we all know that money is powerful. It is powerful that it can either make or break us. In IMG, we will learn that there is something that is more powerful than money, and that is financial education. Financial education is not just for the rich, the wealthy, or the business people, but it is for everyone. Further, we were taught financial education was not taught to us back in high school or college, when in fact it is an important subject, concept, and practice that we need to learn just like math, science, or history. We were taught how to work for money, but we were not taught how to have money work for us. And it's time to change that mindset and practice. And that's why IMG aims to spread awareness to all Filipinos around the globe about financial education so that all of us can achieve financial success. Financial education aims to provide the necessary tools to achieve financial security. In IMG, we combine a great mission that is to provide financial education and a potential business career in the financial industry. We are here to share with you the basics of financial education because we believe that anyone is capable and should be given the opportunity to change his or her life for the better. In IMG, we also have coaches, we have mentors, we have trainers, we have people we look up to, people who are experts in their field to teach and guide us in our journey towards financial freedom. Showing you here are the pillars of IMG, namely Sir Joan de las Peñas, Sir Noel Arandilla, and Sir Bart Borja. They are considered the big three of IMG. We also have notable mentors. We have Brother Bo Sanchez, who is a Catholic lay minister and writer of several financial literacy books, and Sir Rex Mendoza, who is known as the investment guru. He is the CEO and president of Revver Financials, which is the leading mutual funds distributor in the Philippines. So, as a total financial solution, IMG will help us to become financially educated as well as give us opportunities or platforms to apply our learnings. So, if IMG is the total financial solution, what are then the problems or challenges that IMG aims to solve? Every day, people go to work to make a living, but no matter how hard we work or how much we earn, money always seems to control our lives. In fact, the working Filipino continue to face increasing challenges in four major areas. The first one is the uncertain labor market. So this means that there is no security or assurance that our jobs will last long, especially in the private sector. We are not certain if our jobs will be there in the next months or in the next years, just like what happened to most people during this pandemic. It's already going on for almost 2 years now. Nobody expected this to happen, yet it happened. With advancing software and technology, everything seems to be digital nowadays. If you notice, automation is starting to take over. Kiosks, such as what you see here, located in fast food restaurants, in cinemas, and anywhere else, are now being widely used by most companies, thus replacing more and more human workers. The second major area is low savings and high debt. A habit that adds to low savings and high debt is the mentality of party now, bahala na later, or YOLO, you only live once, or bahala na si Batman. We spend our money without considering our future. When we receive our paycheck, we rather eat out, watch a movie, or go shopping instead of saving first or setting aside some money for emergencies, right? So our lifestyle and spending habits can also add to this predicament. We might not admit it, but we also have this tendency to buy more than what we need. For example, we do not need a new phone or a new pair of shoes, but because a new model is out, we want to be with the trend or want to be the first one. And we buy that new phone or new pair of shoes without considering if we can really afford it. So we tend to buy expensive and trendy items just because most of our friends buy them. So these lifestyles and bad spending habits have a big impact on our retirement. Instead of enjoying our retirement, the retirement money that we get is used to pay for our debts. In short, nothing is left for us to spend when we get old and especially when we no longer have jobs. That is why there are people who continue to work beyond age 65 in order to survive. So they will take any job so they can have something to use for their daily expenses. The third major area is the high cost of education. So, in most schools, the increase in tuition happens every 6 years, but in some schools, it can be every year. So when we plan for our children's education, we must take these increases into consideration because the tuition fee this year might double or triple by the time our kids will start college. The bottom line here is there will always be expenses for education, whether our children are enrolled in public or private schools or in any school for that matter, and even when they have scholarships. So, and these expenses include allowances of food, school supplies, books, rent for housing or dorm, transportation, uniforms or clothes, computers, internet, and others. And we all want our children to be in a good school. Hence, majority of Filipinos need to save for the cost of a good education. And the fourth major area is the increasing cost of living, and this is directly affected by inflation. So, inflation is the rate at which money loses its value, and the level of prices for goods and services is rising. As we can see here, the inflation rate last December 2020 was 3.5%, and it went up to 4.2% in January this year, and further up in April at 4.5%. And I think in last July, the latest report was, or in August, that the report was 4.9%. So the higher the inflation rate, the lower the value of our money. Thus, inflation affects the purchasing power of our money. So, in summary, these are the four major areas where most Filipinos are financially challenged. Considering these challenges or realities in life that all of us will face, the next question for us would be, how do we overcome these challenges? What can we do? How can IMG help the Filipino rise from these challenges? It is important to know that our future is not in the hands of anyone else, not our company, not our friends, not even the government. Nobody has the responsibility to make our life better or and financially secure except us. In IMG, we will learn how to make money, save money the right way, accumulate money or how to grow it, and most importantly, to protect the money that we worked hard for. Moreover, we can be our own money manager by understanding how money works and how it will work for us. That's why IMG encourages everyone to acquire financial education because financial education, together with discipline, will help us become wealthy and financially secure to overcome the challenges that we face in the four major areas. And to further understand how money works, let us first learn how the four basic financial concepts. And these are saving the right way, the X curve concept, the power of compound interest using the rule of 72, and how to build a solid financial foundation. The first concept is saving the right way. So, in general, people save money in three ways: the wrong way, the right way, and the abundant way using the abundance formula. The wrong way of saving is shown as income minus expenses equals savings. This means that when we receive our income, we spend first on expenses and save what is left. So, this is the wrong formula of saving because what if there is nothing left to save after expenses? The possibility of having savings is low if this is the way we save money. This means that we are not setting aside money for future expenses or for emergencies. On the other hand, the right way of saving is income minus savings equals expenses. This means that when we receive our income, we save first and spend what is left. This is the right way of saving because we prioritize in setting aside money for our future selves before spending them on our expenses. In short, paying ourselves first. The possibility of having money for future expenses and emergencies is high because when if this is the formula that we follow in saving money. Okay? And the third one is the abundant way of saving using the abundance formula. And it is income minus tithes minus savings equals expenses. So this is the abundance formula of saving because we strongly believe in sharing our wealth and giving back. So tithe is the money we give to the church or an organization that nurtures our spiritual growth. The amount of tithe is 10% of our income, and we can always adjust the percentage depending on our preference and or capacity. Thus, earn 100%, give 10% of your income, of our income to as tithe to God, invest 20% and live on 70%. And this allocation can be adjusted based on how much our money is growing. We can give more and invest more and cut down our expenses. Further, if the abundance formula is not exactly our cup of tea or it's not something that we uh, normally practice, make sure then that we save or we are saving the right way by paying ourselves first before spending money on expenses. That way, we will be secured with enough money for future expenses, for emergencies, and for our retirement. All right. Next, the second financial concept is the X curve concept, which states that ideally over time, as we get older, our responsibility decreases and our wealth increases, as shown by the two lines that run to opposite directions during our lifetime. So the red line is our responsibility line, and the green line is our wealth line or our money line. So when we are younger, we have high levels of responsibility. We have the responsibility to take care of our family since we are the ones working to help our parents, our siblings, or if we are starting our own family. If we are the breadwinner, it is our obligation, whether we live or die, to provide for food, shelter, clothing, education, healthcare, and to pay our bills and loans. Our income during this time is usually temporary and our needs are permanent. Thus, we are using a temporary income to support permanent needs, and thereby we are less secure. At this time, also, normally we have little or no savings at all. That's why we work hard to have money and to receive active income to provide for our family and ourselves. On the other hand, as we get older, ideally we are increasing our wealth because by the time we are 40 or 50 years old, we are already done paying for our loans, our debts, the education of our kids, the house, other expenses, and we are saving and investing more. Hence, as we get older, we have lesser responsibilities and more savings and investments. The goal is to accumulate enough savings that will support us during our retirement years. So when we retire, we continue to receive income from our investments because our investments is how our money is working for us. And this income that we receive from our investment is called the passive income. Thus, when we get older, we say we are more secure, right? Okay, so I hope you see the picture. However, when we are younger and fulfilling our responsibilities, we need to consider the question, what if we die too soon? Are we prepared? Who will then take care of our families who are depending on us? And when we get older, what if we live too long? Do we have enough savings that will last us 20 to 30 more years? Who will take care of us when we get sick and need to be hospitalized? So are we going to depend on our children? Are we going to be an additional responsibility to them? So if these are the questions that you have in mind, if we die too soon, life insurance can help take care of our family because life insurance is equivalent to instant cash that can help our family in the event we are permanently disabled or if we die prematurely. And if we live too long, investment and long term health care will take care of us. So, as parents or future parents or a working spouse or partner who are financially educated, we now know that we need to take care of our families, our loved ones who are depending on us during our younger years. And we should not make our children our investments or retirement fund when we get older. Let us strive then to have life insurance during our younger years to take care of our family if we die too soon, and start our own investments and long term healthcare plans to take care of us when we retire and grow old. Okay? And moving on to the next financial concept, this is the concept of compound interest using the rule of 72. So compound interest is the addition of interest to the principal sum of a loan or deposit and the accumulated interest from previous periods. In other words, interest on interest over time. And this is best described using the rule of 72. The rule of 72 was popularized by Albert Einstein, and it is a shortcut used to estimate the number of years required to double our money at a given annual rate of return. We simply divide 72 over the interest rate. So, to give you an example, if the interest rate is 4%, then our money doubles every 18 years. For an 8% interest rate, our money doubles every 9 years. And for a 12% interest rate, our money doubles every 6 years. So easy as that, right? So to illustrate further, let's take an example. So let's say this is you and you are age 29 now and you have 100,000 pesos to invest. Next, you put your 100,000 pesos in an account that gives 4% interest rate. At age 47, your money has doubled to 200,000 pesos. And at age 65, your 100,000 has grown to 400,000 pesos because your investment doubled every 18 years. Okay? However, if you were able to find an investment, let's say, vehicle where it is giving you 8% interest rate, okay, your 100,000 pesos can grow to 400,000 pesos at age 47. And at age 65, you have 1.6 million pesos because your investment doubled every 9 years. Okay, so see the difference? So how much more if you invested your money in an account that gives you 12% interest rate? At age 47, your money has grown to 800,000 pesos, and at age 65, you have 6.4 million pesos because your investment doubled every 6 years. So basically, when we invest our money, the higher the interest rate, the shorter the time it will take for our money to double. Or the higher the interest rate, the faster our money can double. And keep in mind that compound interest works best when investing for the long term, and that is around 20 to 40 years. So, to give you another example, let's assume we are investing in a mutual fund that provides a 12% average annual return, which is the interest rate. So, using the rule of 72, our money doubles every 6 years, right? So, if we consistently invest 500 pesos every month for 35 years, our total contribution is 210,000. And with 12% average annual return, our investment can grow to as much as 2.9 million pesos. If we have 30 years to invest 500 pesos every month, our total contribution is 180,000 and our investment can grow to 1.6 million and so on, right? So how much more if we are investing 1,000 pesos every month? So if we invest 1,000 pesos every month for 35 years or for 30 years, our investments can double. So in these examples, we can clearly see the difference of or between money saved versus money invested. So if we save for 500 pesos a month for 35 years in a savings account, the total sum is just around 210,000 pesos. And with inflation, its value can be lower. Because what happens to our money in a savings account in the bank? If we still do not know this, most banks will only give us 1% annual interest or less. So applying the rule of 72, if we put 100,000 pesos in the bank, we will have to wait for 72 years before it can double and become 200,000. How much more if we are getting 0.5%? Can you imagine waiting for 144 years? However, we are not saying that we do not like banks, and we will discuss later in the next slides why we need them as well. So the key point here is the interest in savings accounts is too low to offset inflation and increasing taxes. So where then can we put our money so it can grow and balance inflation? The answer to that question is the stock market. We can put or invest our money in the stock market. Many of us have this misconception or wrong impression that investing in the stock market only belongs to the rich or the wealthy. We used to think that investing was only for the rich, for them. That's why we are all fortunate to be here because as early as now, we will correct this misconception. Now we know that investing is a great way for normal or regular people or for the working class to get rich. Anyone who has the means can invest in the stock market. It is in the stock market where we can find investment platforms or financial instruments that will help our money grow to offset inflation. It is in the stock market where we can enjoy 8 to 12% interest rates for the money we invest. And we invest for our long term goals, such as for our retirement fund and big purchases. And we can invest in the stock market in two ways. These are through direct investing and indirect investing. So, direct investing is when we actively participate in the stock market. We actively participate in the buying and selling of shares of a company. An active trader is someone with the knowledge and skills to participate in trading in the stock market. And a lot of research, training, and time is needed before we can become a successful trader. So if we are not into direct investing or we do not know how to actively trade in the stock market, we can still invest in the stock market through indirect investing. And indirect investing is investing passively in mutual funds. So if we are new to investing, it is recommended to invest in mutual funds and learn from there. So why mutual funds? One, it is easier to do. Two, the money that we invest will be handled by professional fund managers who are licensed and certified. Three, a mutual fund includes several companies and not just one, which provides a diverse investment portfolio. And four, investing in mutual funds requires a low investment amount because you can already start investing with just 1,000 pesos. And to know how mutual funds work, let's look at the next slide. So a mutual fund is a company that pools money from many investors or many individual investors like you and me, and the fund managers invest that money in securities such as stocks, bonds, and other assets of companies within that fund. So the fund managers are the ones who invest our money or buy shares from these companies. All we have to do as an individual investor is to continue investing or adding more money to our investment account and wait for our money to grow. So the generated returns or gains that we receive from our investments are from the profits or earnings gained by these companies. And our returns will also depend on how much we invested in that fund. Further, if you are interested in learning more about investing in mutual funds, please talk to the person who invited you so you can attend free classes on mutual funds investing. So, understanding the concept of compound interest using the rule of 72 makes us realize that there is no such thing as double or triple your money in 6 months or in a year because those are most likely scams. All right. And the last financial concept that we will discuss today is building a solid financial foundation. So, a strong and solid foundation will provide us the financial security that we need. We build our solid financial foundation from the ground up, and it should look like this according to priority. First, we must have proper healthcare coverage. Second, we must have proper protection or life insurance. Third, we should be able to manage and pay off all our debts. Fourth, we must have an emergency fund. And lastly, we should be able to save and make long term investments. So, for proper healthcare, there are three types of healthcare. We have the short term healthcare, the senior care, and the long term healthcare. So the short-term healthcare is the traditional HMO. This is the healthcare we get from the company where we are employed. It has no life insurance coverage. Renewal is not guaranteed, especially if there are high claims, and it only covers until age 60. So after we retire or when we are unemployed, we no longer have healthcare or health insurance. Also, any unused premiums are not returned to us, so it's good as nothing. And just like short term healthcare, senior care is the healthcare coverage that covers beyond 60 years old. But this one is very expensive due to conditions or illnesses that we might be having or experiencing when we get older. Annual premiums increase as we age, and renewal is not guaranteed. We do not recommend waiting to be at this age to get this expensive healthcare when we have the option of getting a long-term healthcare while we are able and insurable. So a long-term healthcare is healthcare that has a health savings account. It is renewable and has a fixed premium, and it also has insurance coverage. All unused funds accumulate with interest because the unused premiums are being invested. And the best part is it covers beyond age 60. And we will share with you in the next slides the long term healthcare program that we have in the Philippines. So, having the proper healthcare is the start of building our solid financial foundation. The old saying, health is wealth, rings true because without proper healthcare, we might end up spending most of our savings when we get sick or when we are hospitalized. Okay? Next, we should have a proper protection or life insurance. The main purpose of life insurance is to protect our loved ones, business, or properties the moment we die. So, as breadwinners or a working spouse or parent, our income is our superpower because it is how we provide for our family to give them a comfortable life. Our family depends on our income for essentials like housing, food, clothing, and education, and others, right? So if we do not have life insurance, and if something happens to us, such as if we get sick, we get disabled, or if we die too soon, there is no guarantee our families will be living comfortably after that. They will surely struggle. Okay? But if we have life insurance together with some savings and investments, these can replace our income should something happen to us. Life insurance can help protect our family even after we are gone. With life insurance, the basic needs are at least met since it is a replacement for the income that the family used to receive. So we get life insurance not for ourselves, but for our families who are depending on us. Okay? And to know the right amount of coverage that we need, we compute for the coverage by multiplying our yearly or annual income by 10 years. So why 10 years? We need to prepare our family that we leave behind with enough money to support them, to pay for the essentials like housing, food, clothing, and education, and loans that we will still be paying, and other expenses. And of course, for them to be able to adjust with ease with these big changes without the burden of a financial stress and hardship. Okay, so going back to our example, if our annual income is 240,000 pesos times 10 years, the amount of life insurance coverage that we get should be at least 2.4 million pesos. Okay, I hope that's clear. Moving on to the next block. So, next, we should be able to manage and pay off our debts. It is a known fact that it is easy to borrow money or get a loan or use a credit card because we can instantly buy the things that we want. However, when the time comes to pay for our utang, it becomes difficult. Part of establishing our financial foundation is eliminating debts, especially the bad debts. We need to learn how to eliminate all our utang because if we ignore them, pretend they don't exist, they will continue to pile up. And if you want to learn more about about ways to pay off debts, we also have classes for that. So just talk to the person who invited you. Okay? So the key point here is we should live below our means so that as much as possible we won't get into debt by getting more loans. Overall, let's aim for a debt-free life and say goodbye to debts, okay? All right. Next, we should have an emergency fund. So this is money that is set aside in cases of emergencies such as job loss or sudden unemployment, accidents, unforeseen medical expenses, home or car repairs, and others. So this is different from our other savings and investments. So this is the money that we put in our savings account in the bank that has ATM accessibility. So whenever there is an emergency, we can easily withdraw the money. That's why we still need banks, as mentioned earlier. So having an emergency fund prevents us from using our insurance or investments in times of emergencies. And to compute for an emergency fund, we compute this by multiplying our monthly expenses by 12 months. So normally it is 3 to 6 months of expenses. However, since we have this pandemic, it is suggested to have at least 12 months of expenses. So to start, we list down all our monthly expenses such as rent or mortgage, utilities, groceries, internet bills, uh, cable bills, phone bills, and others, and multiply the total by 12 months. So for example, if we have 10,000 pesos monthly expenses times 12, we should have at least 120,000 pesos as emergency fund in our savings accounts. And we can always start small, and eventually we can build up our goal amount. Okay? And lastly, we should be able to build up our savings and investments. When we are young and working, we need to save up for our retirement. We need to have enough money to support us when we no longer have jobs or active income. And if you still did not know this, we compute for our retirement fund using this formula. We multiply our yearly or annual income by 20 years. So why 20? We are considering the number of years that we may live after age 60, and we need this big amount for us to offset inflation and increasing taxes. So if we are earning 240,000 pesos a year times 20, our retirement fund should be at least 4.8 million pesos. We might think we won't be able to save for this amount if we only have 20 or 30 years before retirement. However, there are ways that we can achieve such goal, and that is to invest in mutual funds and long-term healthcare. So, in summary, here is the solid financial foundation that you can take a screenshot of so you can have a copy of it, including the action plans that we need to take to establish our financial house. Because with a strong foundation, we will be provided with a well established financial house, which means a financially secured family. Again, for proper healthcare, we get the short term healthcare during our working years and long term healthcare plan for our retirement years. For life insurance, we get the minimum coverage, which is our annual income times 10 years. We need to live below our means to avoid overspending so that we can manage to pay all our debts. We need to set aside an emergency fund, which is 12 times our monthly expenses. And lastly, we need to build up our retirement fund by computing our annual income by 20 years, and we can achieve our retirement fund goal by investing in mutual funds and long term health care. So, what happens next? Where do we start? How can we start building our financial foundation? So, for most of us who are new to these concepts, it might be challenging to start building our solid financial foundation. However, If there are three major financial needs that we must secure first for ourselves and our family, these are proper healthcare, proper protection or life insurance, and savings and investments. And IMG is here to give us not just financial education, but provide us with this platform to start increasing our income and give us access to the different trusted companies that will offer us the right insurance and investment opportunities. And one of IMG's partner that will help us start building our solid financial foundation is Kaiser International. So Kaiser International is the only company in the Philippines that offers long-term healthcare that is coupled with protection or life insurance and investment. So in this program, we do not need to save separately for healthcare, another for insurance, and another for investment. That's why it is called a three-in-one program, because with just one saving, we can already save for these three. So we have healthcare to pay for our hospital bills and as an HMO during our retirement years. We have life insurance to protect our family in case we die too soon. And we have investment to provide us income that we need when we retire or when we live too long. Okay, so let's take an example here. Let's say we are 22 years old now and we get the Kaiser K100 plan. So the total contract price is 411,750 pesos, which we can pay monthly, quarterly, semi-annually, or annually. Okay. Take note that there's also an annual policy fee of 500 pesos. Also, we can pay this healthcare via spot cash, meaning a one-time payment of 372,700 pesos. And in this example that we are showing here on the screen, let's say we are paying annually. Okay, so that's 58,821 pesos plus 500 pesos policy fee every year for 7 years. So Kaiser Healthcare Program is something that you pay for, or it's a healthcare plan that you pay for just 7 years. Okay. And during the 7-year saving period or the accumulation period, we receive benefits such as free checkups, APEs, dental benefits, waiver of installment due to death and disability, basic medical benefits, and so on. After the 7-year saving period, we will be given a certificate of complete payment. And then all we have to do is allow our money to grow for the next 13 years. So during the growth period or the extended period, we will still get the benefits that were mentioned earlier. And upon reaching maturity or the 20th year, our money that we saved worth 411,750 pesos has now accumulated to almost 1.2 million pesos. Our saving for just 7 years can reach this amount, provided we did not get sick and use a portion of our savings. So long as we did not use any of our savings for 7 years can become 1.2 million pesos. All right? And after the growth period and after our money has grown to 1.2 million pesos, we have the following options. 1, we can withdraw the entire maturity value. 2, we can withdraw portions of it, like withdraw 50% and leave the other 50 invested. Or third, retain the maturity value and let it grow further, especially if you don't need it. Take note, however, that if we go for option 1, which is withdraw the entire maturity value, once we do that, we will no longer have coverage under the Kaiser healthcare plan. Hence, it is highly recommended to keep the whole amount or a portion of it invested so that we still continue to have healthcare coverage, which is basically the main idea, right? Okay. So if we started saving for this Kaiser healthcare plan by age 22, and when we reach 60 years old, provided we haven't used or withdrawn any of our savings, the total accumulated amount can grow to as much as 6.4 million pesos. And by age 65, our investments can grow to 10.4 million pesos. And that is how compound interest works. All right? So the Kaiser Healthcare Program is a health fund for when we get sick, but if we remain healthy, it becomes a savings and investment fund. If you want to know more about Kaiser Healthcare Program, please talk to the person who invited you, and you can also visit the website kaiserhealthgroup.com. Okay? Aside from Kaiser International, IMG is also partnering with several huge companies in the country, providing healthcare, life insurance, investment, and other financial products and services. And with these partnerships, IMG is providing a lot of benefits to its members. So here is a list of some of these partner companies per category. By being a member of IMG, we can avail of the products and services of these companies for free or at a discount. Okay. The next one, here is the list of exclusive benefits that IMG is generously giving to its members to start saving for our future based on the financial concepts and principles of building wealth. As of this time, there are 49 benefits. Benefits 1 to 40 are applicable for those based in the Philippines, and the additional benefits 41 to 49 are given to our OFWs or international members. And since we do not have enough time to discuss all this, allow me then to highlight some of these benefits that will help us start building our wealth. So, number one, we have unlimited free financial seminars and checkups, just like today. Free 1,000 pesos personal accident insurance, provided we have active accreditation. We have 50,000 life insurance from Fidelity Life with just 500 pesos one-time fee. Free eye checkup and eyeglass frames. IMG members can get 2 free eyeglass frames per year. We have free unlimited consultation at Kaiser Medical Center for members and discounted medical services for members and their immediate family. We have access to Kaiser Healthcare and access to Manila Bankers Life Insurance for affordable life insurance products. We also have a zero entry fee on mutual fund investments. Because if we open a mutual fund account with a financial broker, we normally pay fees for it. But as an IMG member, we don't pay any fee. And as a member, we are entitled to 1,000 pesos initial investment in a mutual fund account. If we are into active trading in the stock market, we also have access to MyTrade, which is an online stock market trading platform. We can also avail discounts on non-life insurances such as car insurance, travel insurance, personal accident, fire protection insurance, and others. We also have discounts on real estate purchases with SMDC, Ayala Land, or DMCI, and discounts on car purchases. Plus, we also receive free Everest Memorial services. In IMG, we can also travel the world for free, we can have world-class recognition, and we can qualify for free HMO coverage when we continue to do the business ownership program and reach certain milestones. So with IMG, we can establish our financial business via the business ownership program, which can be the start of our business career as a financial educator in the financial industry. With this program, we can set our time, we can have the support of IMG with the online system, we can achieve the income that we want, and we can become debt free while helping families achieve financial success. So, how do we start receiving these great benefits at IMG? The answer is simple: become a member. And this is a lifetime membership with a yearly accreditation. And we have two membership options: basic membership and associate membership. So if we choose the basic membership, we pay a one-time fee of 6,000 pesos, and the benefits that we can get are access to the 49 benefits mentioned earlier, the opportunity to be licensed and accredited as a financial planner, 50,000 death memorial benefit, 100,000 accident insurance benefit, the online mutual fund account with 1,000 pesos worth of shares, and unlimited financial education, trainings, and classes. And as we can see here in the upper right side, with just the basic membership, two blocks of the solid financial foundation are already covered, which are life insurance and investments. And if we choose the associate membership, we pay the one-time fee of 6,000 pesos plus the first month's payment of the Kaiser healthcare plan. So in this example, we are using the K100 plan. Hence, the total initial payment is 12,382 pesos. And with this membership, the benefits that we can get are access to the 49 benefits, the opportunity to be licensed and accredited as a financial planner, up to 500,000 burial and death benefit, 1 million accident insurance benefit, the online mutual fund account with 1,000 pesos worth of shares, and unlimited financial education, trainings, and classes. Plus, the opportunity to start a financial brokerage business with six-figure income potential, which will help increase our cash flow, which will in turn help us manage our debt, build our emergency fund, and increase our investments. And of course, we have our Kaiser 3-in-1 long-term healthcare. And take note of the financial foundation. With the associate membership, all blocks are covered, which makes this a great start for us in building our solid financial foundation. So if you want to take a screenshot of this table, you may do so. And on the next slide, here is the breakdown of the membership fees that we will be paying for. So for basic membership, 5,500 pesos is the one-time membership fee plus the 500 pesos for the Fidelity Life Insurance with 50,000 coverage. On the other column, we use the Kaiser K100 plan for the associate membership. Thus, the total initial payment is broken down into 6,000 membership fee and life insurance and 5,882, which is the first month's payment of the Kaiser K100 plan, and of course the 500 pesos annual policy fee. So in the associate membership option, we also have higher and lower plans that we can choose from, and not just the K100 plan. Okay, but if we are getting the K100 plan, we will initially pay the 12,382 pesos, and on the second month onwards, we will only save 5,882 pesos every month for 7 years, with the option to pay either quarterly, semi-annually, or annually. So you can also take a screenshot of this breakdown. And if you are interested in becoming a member or to learn more about our membership options, please do not hesitate to have a chat with your inviter. Okay? And to close today's class, after learning the realities that we are facing and the benefits that we can get from IMG, some of us can still be skeptical or hesitant to start saving and investing. But no matter what our excuse is, we will still get older next year. Our kids will grow up and enter college, and we will need money to pay for their education. We will eventually retire and stop making active income. The point is to take action now. Invest in the present to ensure a secure future for us and our family. Be part of a community or a group that inspires you. When members of your community save and invest, you will be inspired to save and invest as well, because the opposite will happen. When you surround yourself with people who are spenders, you will most likely spend more than you earn. Hence, find your money tribe that will help you rise from the financial challenges and help you achieve financial success. IMG's mission is to convert people from being spenders to savers and to teach them how to save the right way. And in IMG, we all start as savers. And eventually, we can become an advocate, an educator, and an entrepreneur. So, being here now, you can be included in our movement, the 30M by 30 financial literacy campaign. So, please provide your name and your email address to your inviter so you will be counted. Further, we are encouraging all our guests here today to invite more of your family and friends or whoever who can benefit from this class. Let's all share the mission and grow our financially educated community. As of 10 a.m. today, we are able to to reach 4.1 million Filipino families around the globe. So let us all be part of this advocacy and start building a better future. Remember that financial independence is not a dream, it is a decision to make. So don't just dream about financial security, make it happen. And why not start your journey towards financial freedom with IMG? Thank you very much for investing your time today. I hope everyone learned something new, relearned something familiar, and unlearned something that needs changing. Thank you, everyone. Let's continue to stay safe, and God bless us all.